talked a lot on this show about AI, flock cameras, and these massive data centers going up all across the country. But there's another side of this story that I think that we need to be paying very close attention to: the money. Because underneath all this hype surrounding artificial intelligence and data centers, there are some serious warning signs that are flashing. So just look at what happened to this guy named Leopold Aschenbrenner. So he was called literally the Nostradamus of AI. At just 22 years old, he published a 165-page manifesto that predicted where AI was headed. It went super viral, and he became one of the hottest names in the AI world. And then he eventually launched his own investment fund called, ironically, Situational Awareness. So at its peak, the fund managed around $45 billion. But then last month, it got absolutely crushed. So in a matter of weeks, this so-called Nostradamus of AI reportedly lost around $35 billion, about 2/3 of his investors' money. But think about the irony of this. A guy whose entire reputation was built around understanding what was coming next and whose fund was literally called Situational Awareness, he didn't see this coming. But I think the story is much bigger than one guy making a few bad trades, because there is an insane amount of money pouring into artificial intelligence right now. In the first quarter of this year alone, AI companies received close to $250 billion in investment. That's roughly 80% of the global venture funding. And increasingly, some of this is being fueled by something called circular financing. So basically, Company A invests billions of dollars into Company B, but then Company B turns around and uses that money to buy Company A's chips, computing power, cloud services, etc. So the money goes out one door and comes right back in through another. And every time it makes this trip, the valuations climb, revenues grow on paper, and everyone gets richer. At least until the music stops. We've seen the versions of this movie before. The dot-com crash that wiped out nearly 80% off the peak of NASDAQ from its peak to its bottom. The 2008 crisis, which destroyed retirement accounts and wiped out huge amounts of household wealth. And in both cases, it's ordinary Americans who bought into the excitement near the top that were the ones left holding the bag. So what do? Well, you can sit on the sidelines and hope that everything just works out, or you can actually learn how these markets work and take control of your own financial future. And that's exactly why I wanted to bring today's guest on. Welcome to Man in America, a voice of reason in a world gone mad. I'm your host, Seth Holhouse. On this show, we talk to real Americans with real solutions. We help you to connect what's happening today to decisions that powerful people made in the past so we can learn something from it and build something better. So today's guest is a guy named Mark Wilburn, and he's the president of Neos Capital, and he's the author of a book called Understanding the Matthew Effect, Unlocking the Mystery Behind Why the Rich Get Richer. So Mark has built an incredible track record of anticipating major market moves, including stocks like Tesla, AMD, and Meta, even Bitcoin, and then even Target, right? Their rally this year where he warned people to take profits before the drop. Now, whether you're a complete beginner or you've been investing for years and you want to understand what's happening right now, pay attention to what Mark is talking about. This guy knows his stuff. But what's also good is that Mark is also hosting a free virtual event called the Freedom Trading Summit. Again, this is free. It's August 27th and August 29th. And he's going to be breaking down what's really happening behind the smoke and mirrors. He's going to show you strategies for protecting your family's money and building wealth. But he's also going to be doing live Q&As amidst this. So again, if you enjoy today's show, you enjoy the conversation, you should check out his free summit. It's free to register. And so to visit this, you just go to MIA-Neos, that's NEOS.com. I'll make sure that that URL is in the show description. And you go on there and you just click on this little green button to reserve your seat. And again, it's free, so you can include it. There's going to be Q&A, lots of back and forth. And again, this is August 27th to 29th. Again, it's MIA-Neos.com to register for that. Okay, let's go ahead and jump into this interview with Mark Wilburn. Mark, man, it's good to have you back on the show, man. Thank you for being here with us today.
It's my pleasure, Seth. I love coming on here with you guys and really enjoy our pre-chat, the time that we have talking before we actually get recording. We should probably start recording some of that stuff.
Oh, I know. I think that our pre-chat will be longer than the interview ends up being. But I got that's just what happens. We've got so many things in common that we're checking on. Okay, tractors and kids and community and the apocalypse. So we have to touch on all those important things. But so speaking of the apocalypse, let's talk about the AI apocalypse. And we're not going to be getting into the Skynet, drones, blowing up your cattle and that kind of stuff, but more so looking at the potential. You could call it maybe like a financial apocalypse, right? The right. AI bubble, because I think there's a lot of excitement about the stock market right now, and people that have had Nvidia and whatnot, and they're thinking, oh my gosh, we're hitting all these highs. But there are so many warning signs that I think people, especially that are kind of caught up in the excitement of it, are maybe choosing to ignore. And so you're going to help us understand those today, right?
Absolutely.
So I want to start just with this one story in particular, because there's a lot to this. So this guy right here, and I think we'll play. I've got a little video of him laughing, which I think is probably worth us watching. This guy right here in the forefront, Leopold Aschenbrenner, who they've literally have hailed as they're calling him the Nostradamus of AI, and his fund is called situational awareness, which is typically meaning that you're looking for all the threats and you're acting before the threats come on. Where I think that he's kind of looking at it and he's situationally aware of all the opportunities, make all this money, yet he just lost a ton of money. Like I think this is a little kind of micro bubble example. So walk us through what happened with this guy. Like what's going on here?
Yeah. So we have a guy here who, from an academia standpoint, is brilliant. I mean, if you look at his college degrees and everything that he's done, he's a very intelligent young man. Unfortunately, if you start judging things by its fruit, it's not the best, right? Jesus said, you'll judge by its fruit. A good tree bears good fruit. And if we look at his track record, in that article that you're referencing there, because I did read that one, it actually says that there's only a handful or a couple hundred people that really know what's going on, and he happens to be one of them. Basically saying he knows what's going on, he's situationally aware, but no one else is. Right?
Right here's his quote. Yeah, it says he wrote this in an essay, which really was what led to him really blowing up, was this essay that he wrote. But he says, right now, there are perhaps a few hundred people, most of them in San Francisco and the AI labs, that have situational awareness. Through whatever peculiar forces of fate, I have found myself among them. Yeah, so he's obviously in this elite Silicon Valley crowd, but how much?
It's the mindset of that elite liberalism. I'm smarter than you. I know what's going on. And then when you look at his track records, like his first job was with FTX, Sam Friedman, and that ended up being a giant Ponzi scheme. The whole thing imploded. He went to prison, right? So not really situationally aware there, were we? Number two issue that he ran into is he gets hired from OpenAI and then gets fired for trying to leak secrets. So if you look at the integrity standpoint, not situationally aware there. And then recently his actual fund, where he had 45 billion and unfortunately was leveraged to the hilt. What that means is he borrowed extra money, almost like $4 to 1. So he borrowed for every $1 he had investment, he had 4 borrowed in different AI names that were really popular, like a Bloom Energy, some data storage companies like SanDisk. And when those dropped 55% in 6 weeks, his entire fund went kaput. He lost over 60% of his investors' money in a matter of 6 weeks, which to me, that's impressive. Like if you want to get into impressive stats, like losing that much money that quickly, that's pretty impressive. So I'll give him that. But he wasn't aware of the downside risk. And then you have Citadel Capital that came in, swooped in, and bought it for pennies on the dollar and kind of rescued that guy in that event. And so for me, what it really shows, Seth, is the danger in the bubble that AI is creating. Because here's the guy who he's in the know, he's situationally aware, he's among the elite in the AI labs, and his very fund blows up.
Yeah, this is so this is a different article on Forbes. I'm going to read just this little summary right here because it's pretty wild when you look at the actual numbers. So it says the Situational Awareness Fund, led by this Leopold guy, suffered a $35 billion AI trading loss, topping historical records. After gaining 439% by June, the fund plummeted 67% in July. This massive reversal stemmed from extreme concentration in AI stocks like SanDisk and Micron, coupled with up to 400% leverage. When these holdings fell sharply, margin calls forced the funds into distressed selling. Citadel capitalized, acquiring $16 billion in assets at discounts. The incident underscores how leverage can strip investors of control, forcing liquidation even if the long-term investment thesis remains sound, turning a successful strategy into a forced exit. So this is kind of crazy. Okay, this guy he had a fund of $45 billion that obviously had blown up, right? So he had gained 439% by June. This guy is probably thinking he's on fire. He's investing in all these AI and tech stocks. Yet in July, his fund plummeted 67%. So he lost about $35 billion out of $45 billion. But the thing is that, I mean, it seems like this guy was doing what all the mainstream investors are advising, capitalize on the AI growth, invest in the tech companies that are going to see a need in an AI-driven society. Yet, obviously, there's something that went wrong there. And I mean, so am I correct in thinking that what we saw with him is maybe it's a little bit of a kind of preview of what the AI bubble would look like?
It's definitely a preview of what could happen. And to me, looking at him, like, he made cardinal rule mistake number one, which is you're not taking profits. You're leveraging even more. And so one of the things that we love to show people is when you have these outsized gains, 469% is remarkable. You take profits to protect those gains so that if something happens, you don't give it all back, much less blow up your fund, right? And so we teach that on a basic level. And apparently he forgets that kind of stuff. But to get to your point, what we're seeing here is a massive bubble that could really dwarf the .com that we had in 2000 with tech. And if you'll remember, going all the way back there, the NASDAQ dropped 83% and it took over 16 to recover to its high. And so if I'm heavily invested in tech, which is what everyone's telling you to do you want an 83% potential drawdown? Absolutely not.
And also,
so if that
people
were to happen,
even that aren't even invested in tech, because it's like the stock market is tech, right? So even if you're investing in like old school, blue chip stocks that they refer to them as, like, even if you're really safe, if the AI tech Titanic sinks, it's going to pull down all the boats around it, right?
Absolutely. Everything has the potential to drop. And right now, the way that markets are valued is you kind of have what's called the Magnificent Seven, which is your Nvidia, your Apple, Amazon, Microsoft, those really big popular names. And they're so heavily weighted that when those names drop, the rest of the market drops with it. Right. So companies like a Boeing or Lockheed Martin that are kind of out of that space still go down. Visa still goes down. Companies that you would think would be safe here could still drop if the entire thing collapses. And to me, he's a poster child of this very thing.
Well, I guess here's something to look at, right? This is just the Magnificent Seven stocks versus the Chinese stock market, right? So the entire Chinese stock market is a $12 trillion market cap. You're looking at here, the Mag 7 combined are probably a good 30, 40% more than the total Chinese stock market, right? And then we're looking at Apple, Nvidia, Microsoft, Google, Amazon, Meta, and Tesla. So yeah, just the amount of money that's sitting in these companies. And you just mentioned I've heard that there are a lot of experts I've been following. They're saying that, and they're analyzing this objectively. They're saying this dwarfs the .com and this dwarfs the housing market. Because you look at even the housing market, that was just the housing market. Obviously it's a big market, but this is the everything market.
Well, a couple of things there. I mean, like even that chart you were showing NVIDIA with the a $3 trillion market cap, right? Is that what it says? Apple's 3.4.
Yeah, 3.2.
That's way outdated. I mean, Nvidia's market cap right now is over 5.2 trillion. Apple sitting at about 4.6. Google's at 4 trillion. So that's actually an outdated chart, which means that this thing has inflated even more. And if you couple that with a stagnant housing market, which is what we're seeing, it's definitely a buyer's market. People aren't being able to sell homes as easily as they were because interest rates are higher. Inflation has driven prices up. If we see a double bubble bust, that's not a good thing unless you know how to position yourself and take advantage of it.
You're invited to a very important live stream. You know that right now there's a globally coordinated attack on liberty and privacy to a level that's never been seen before in humanity. You know that most of the news articles you read are designed to be distractions for the real agenda, the rollout of a social credit system in the West. And that's exactly why I've asked Glenn Meter, an online privacy expert, to give you a special online class on Thursday, August 27th at 8 p.m. Eastern, where he shows you all the necessary steps to take back your privacy online. It is a lot easier than you think, especially if you know where to start and you've got a privacy expert that's guiding you. Glenn's class is titled Exposing a Coordinated Attack on Liberty and Privacy. You don't have to be tech savvy to take back your privacy. You don't need any high-level technical skills or hacking skills. All you need is the ability to use a browser and a desire to protect your freedom. So Glenn is even going to stay on afterwards to answer your questions live. So if you feel overwhelmed because you think there's no way to protect your online privacy, you need these strategies that Glenn is giving away for free. So it's time to take back your privacy. So to register for the free webinar, visit privacyacademy.com/man-in-America or just click on the link in the show description. Here's another thing to look at. Now, this is only looking at 23 to 24, but here it's like you're seeing, this is showing the Mag 7 versus the S&P 500. Right. And you can see, and I know that if I found a more recent chart, it's accumulating even more, where you can see more and more concentration moving into just those stocks. But so one thing is, so if you look at the housing market, which one of my favorite movies is The Big Short, right? Just for a lot of reasons. This is such a well done movie. But if you look at just the housing market crash, it wasn't just natural circumstance, right? We know that it was primarily through fraudulent financial behavior. It was through banks, and mortgage companies giving out loans to people that should not have qualified for loans. But then it was the banking industry that was taking all those bad loans, repackaging them. It was the corrupted rating agencies that were giving them all AAA rating, even though they're a bunch of this junk shoved together. And you can see that they really, it's like they poured gasoline all over the base of the shed. And then when it lit up on fire, it's like, oh, well, it's not our fault. But what you see with the Magnificent Seven is they have this circular funding. And so this is something that I think that you know way better than I do. And I have a little kind of chart I wanted you to look at here with me. So explain to us what this circular funding is, because am I correct that this is kind of like the equivalent of the nefarious banking activity in 2008, only on a much larger scale, right?
Yeah, it's very similar, and you can see kind of at the center of that Nvidia is in the center here, and I'm trying to look into it to show you, but you see how the money is flowing from services through different companies, right? So we'll take OpenAI here. So you've got Nvidia investing into OpenAI as a quote investment, and then you have OpenAI paying Nvidia through their investment with chips, GPUs, et cetera, using those exact same funds. And it really looks like a big Ponzi scheme. Money's not being created. It's just being moved around on a balance sheet. And so when there's no more propping up here, that's when things start to fall apart. And you see companies like, CoreWeave is up there. That was one that had a huge drop earlier this year from its highs. And when these things do start to pop, because of the I'm going to use the creative accounting metrics is probably a good way to say it, because you're able to, when I buy GPUs, I'm able to write that off over the next 5 years, even though I'm buying the brand new one that comes out to stay ahead. And the one I just bought is basically irrelevant in a single year. They're writing that depreciation off over 5 years. So it makes their books look really good. To explain it to the average person, this is kind of what's going on. It's the adage of I'm robbing Peter to pay Paul. And so I have a credit card balance here, and instead of paying the credit card balance, I'm just getting another credit card and putting that balance on the credit card. And then I get another credit card and I put that balance on the credit card. And it eventually, the cards collapse because the bill comes due. And that's what we're seeing happen here. And this graph actually does a really good job explaining how that money is moving. And when this thing pops, how much actual money could just dissipate overnight.
It's almost like a Ponzi scheme. Right? See, I've you know, if you look at Madoff and how he ran things, it's kind of similar. So I'm just going to just trace a few things in here, right? So we have, okay, let's look at OpenAI, right? Which is ChatGPT, Sam Altman. So it's like, okay, so OpenAI, there's this blue arrow. OpenAI inks a $300 billion cloud deal with Oracle. So then Oracle, right? So Oracle is now spending tens of billions on NVIDIA chips. Now, NVIDIA is also investing $100 billion back into OpenAI, right? So, but then OpenAI is you know, it's the same thing is happening, right? So it's almost like you have this small community where you have like a baker, you have a farmer, and you have the grocery store, and you have this outside money. Everyone thinks, oh, this community is blowing up. This small little community somehow, you know, this baker sold $30 million worth of donuts, right? How's that happening? And what you realize is everyone's pouring all this money in. So it's almost like they're putting all this money into the baker. The baker is then buying all this wheat from the farmer. But then the farmer is also, because now the farmer has all this money coming in, the farmer is now agreeing to buy all the donuts from the baker, and then the grocery store is doing the same thing. And so it's like you have this circular community where all this money starts flowing, and you feel like there's all this huge financial activity, but it's actually that people in a sense got duped to all put their money into this thing, and they're just shuffling the money among themselves, which makes it feel like you see these headlines of OpenAI inks a $300 billion cloud deal with Oracle. It's like, wow, what a booming industry. But Oracle then takes that money and they're gonna spend billions on NVIDIA chips, and NVIDIA then is investing that money back into OpenAI, and OpenAI is then buying. So it's almost like this incestuous criminal enterprise or something.
And it also makes it, with using such large numbers, it confuses people because it's hard to conceptualize $300 billion, right? Like that's a very hard concept for the average person to conceptualize. So, and really wrap your mind around. So when you're using those numbers, it's really confusing, but it's just moving numbers. That's all they're doing. It's like, oh, here's your piece. Oh, give it back to me now. Oh, let's give it over here. And so it's almost like a shell game.
It's like a shell game, or like say musical chairs. But then the problem is just that it's just the average retail investor that ends up getting screwed at the end of it. Like this is the unfortunate thing. And they're just laughing at us, actually. And so let me play. It's like, okay, let's play the Leopold laugh. Okay. So this is Leopold in an interview. How long? This is, a couple years ago. Anyway, I'm just going to play this because it's like, okay, this is the guy. This is the AI Nostradamus. Okay. Let me hit play on this.
Yeah, I guess that would be nationalized.
That's the short summary of my post or my view on the project.
Okay, so but before we go further,
I mean, not to pick on him because of his laugh, but it's like this is the AI Nostradamus who just lost $35 billion. It just seems like they're mocking us.
And sadly, what they're saying is, oh, you had the right premise, just the right timing. Timing actually matters. Timing matters. So if I were to shoot a deer at the wrong time, it's going to get away. Same situation here, right? This guy blew $35 billion of people's money. Can they recoup that? Maybe. Hopefully for them they can. But at the same time, these are people that also have $25 million minimum buy-in in that particular fund. So you see this playing out. You see his bubble bursting. His situational awareness bubble is bursting. And the hope is it's not a future prediction of what could happen to the overall market. Most likely, it could. So how do you protect yourself?
Well, and I want to bring something in along with that is just the framing of this, because I know that before we started recording, we were kind of talking about this. Where is this all sitting spiritually, right? And because I think you see a lot of this is it's funding AI. It's almost like you go back in time. Imagine them raising all this money to build this tower that was going to reach heaven, right? This Tower of Babel, right? And actually, this article right here, Searching for God in Silicon Valley, it says, the work of building frontier AI has brought us to the edge of where he might be. I mean, even that, to think that like the edge of where he capitalized might be,
right.
That like people think that they can reach God through AI. And so it's funny, it's written in the faith section, right? Which is weird, but this woman, this is Leopold's wife.
That's his wife.
That's his wife writing about this. She says a running joke at Bay Area parties is that AI researchers are building God. And of course, she kind of downplays it and says, "Oh no, they're being grandiose and they're just trying to do." But no, you can see that there's something much bigger happening with this AI bubble. Like I feel like it's almost as if it represents mankind's the Tower of Babel 2.0. What's happening, and we all know what happened there. But how do you look at this?
Well, it says that they're basically making that God, but they're making God in our image when he made us in his. And anytime humanity has flirted with this idea, it's not really turned out well for humanity. Right?
No.
In fact, if you even go look at Romans, it says that because they took the image, Romans chapter 1, they took the image of an incorruptible God and made him in the form of corruptible man, he turned them over to the unlikely passions of their heart, right? Like he's talking about idolatry there. Moses and the children of Israel. Moses is up on the mountain, the children of Israel make a golden calf so that they can worship something that they make. Doesn't turn out too well for them, right? Over and over and over again, we see these same stories, which is one of the reasons I love what you're building with the ark, as it was in the days of Noah, so it'll be in the coming of the Son of Man. And it is a very dangerous thing here. And so I am very weary of AI. Is it here? Yes, it's here. There's nothing you can do about it. And I think it could be a very good tool, but a terrible master. And these people in Silicon Valley are taking a spiritual stance that is extremely dangerous. And one of the tools I have learned from the very liberal left and or honestly the demonic, not to call the liberal left demonic, but both of them play with this same scheme, is they'll tell you what they're going to do, but they'll tell you what they're doing in a joke. And so that you'll laugh at it. You'll think it's funny. As a running joke in Silicon Valley, right? That's even how she starts it out. As a running joke, this is what we do, right? I'm telling you what we're trying to do. And so they say that so that you think it's a joke, when in reality it's not. Let your yes be yes and your no be no. Like Scripture's super clear about that. And I find it very funny how Jesus even says that the kingdom is within. So why are we trying to make this other thing when he gave us Holy Spirit? And that points us to the Father. So there's a very interesting underlying current spiritually here that people should be aware of.
Well, and you also, you mentioned a few different examples, right? And saying, yeah, well, look how that turned out for them. And I think that this is also the case. And I would say that, the idea of living in the days of Noah, right? I think that we live in just a time in history where man's morality has plummeted. There's still a lot of good people holding on to that tradition, holding on to the virtues and faith and all the things that are good. But you can see that by and large, the cultural Marxism and the moral fabric of our world has really been eaten away at. And I think that, especially if you look at, and there's even that article mentions how a higher percentage of people working in AI and tech are atheists, and they're godless in essence. And I think that what happens is that when you have a society that gets further and further away from God, man becomes more arrogant, has more hubris, he mocks God more. And I think that he becomes even more convinced that he is God, or that he can do things as God would. Like we're saying that they're building AI, which could be supposedly in God's image, but in man's image. And I think that whenever you have that situation of man mocking God and feeling like the way that I think a lot of these people do right now, that they are in control, they're so powerful. God has this pretty amazing way of resetting the scales, and we have numerous examples of that. And so you could almost be able to talk about the AI bubble. It's a question is like, is the popping and the destruction of the AI bubble, is this kind of like the modern Sodom and Gomorrah, just destroying all that is wicked?
No, I mean, that's a great thing to ponder. And it absolutely could be that type of judgment coming down. Whether that turns into a brownout event that just fries all technology and sets us back to 1970s, which, I mean, might not be a terrible thing.
Yeah.
Right? If your kids go outside and play more, get them off screens. Or if it's just the bubble popping and, I hate to say killing two birds with one stone, but you see the AI bubble dropping, and then all the financiers lose what they deem most valuable, which is typically their money. And so, it's the Lord just showing up being like, hey, I'm God, you're going to worship me.
But there's a lot of good people that are also sucked into this, right? Is there a lot of people that are watching the show or listening to the show right now that are thinking, oh, my 401k is pretty heavily weighted in NVIDIA or anything of the sort. And so how would you speak to that person, right? To the person that is saying, okay, I get this. It's all well and good. Mark of the beast, Tower of Babel. I understand it all. However, my financial advisor has put 2/3 of my 401k and half of the IRA into the stock market, right? Mm-hmm. So for people that are thinking like that, how do they weather this storm?
Excellent question. The biggest thing is getting your knowledge base, so you either know what questions to ask your 401k managers, or even starting to learn how to do this thing for yourself. But education is potential power, right? You have to actually put it into action. That's why I use the word potential there. It's not kinetic. You've got to put it into action. You've got to do something with it. And coming and learning on how to make these right decisions is paramount. The market is a wonderful tool that you can utilize to make capital. That's how I make a living. I trade every single day. We swing trade, we day trade. We were talking about earlier some of the call outs that we had, especially in silver. I know that got you. We were kind of looking at different entry points and what we were doing there. That's how I've lived my life for the last 20 years. And it's been a phenomenal tool, but it's nowhere close to my God. Right. And so the goal that we love to teach people is you need to have money, not let money have you. And there's a big difference there. So learning how to weather that storm, learning how to ask, hey, if this bubble starts to pop, can you put my money in an inverse ETF? What is an inverse ETF? That's where it goes up if the market goes down. There's vehicles that do that. Absolutely. And you could actually allocate some of your funds over to that just in case it were to happen. Right? Or once you start seeing the signs that it is happening. And there's different ways that you can communicate to your 401k manager, your financial advisor, whoever it is making those decisions, or better yet, empower yourself to make your own decisions.
So basically, it's two-pronged, right? I guess one way is you learn enough that you actually just take control. Right, you just say, okay, I'm no longer going to let you manage my money. I want to take control of it, and you learn just the basics of how to do that. Or the other thing is that it's kind of like you look at what's happened with medicine, and I think I've been kind of hitting on this theme lately. Is that COVID hit, and all of a sudden, a lot of people were saying, "I can't just trust that guy in a in a white lab coat anymore. I'm not going to just walk in and say, okay, hey, what's the next thing you want to squirt into my shoulder to make me feel better?" And so people are realizing, like, okay, I need to take control over my own health. I'm going to start reading the ingredients. I'm going to ask the doctor for the ingredient. Where's the white paper that has all the ingredients inside that vaccine you want to give me? I want to look at that. So people are becoming more diligent with their health. But I think that
what are the side effects from it?
Exactly. Right. And so I think that what you're doing is kind of the financial version of that. So instead of me having Dr. Brian Ardis on, who's going to tell people, okay, here's how you can fix these things without going through your doctor's pharmaceutical solutions, that similar, I think a lot of doctors are the same as a lot of modern financial advisors are saying, hey, here's your kind of stock market package. They're getting their kickbacks on it. Whereas what you're doing is you're showing people how to take control of their own financial health, right?
It's an awesome analogy. And that's exactly what we want to do for people. We want people to learn how to read charts, understand entry points, exit points. Why am I in this? Right? What is my financial risk if I do get into this? Right? If I'm going chasing MU or SanDisk at these all-time highs after a 6,000% move or 5,000% move, whatever it had, what's my downside risk here? That's a lot versus what's my downside risk if I were to get silver here? Big difference. And knowing how to read and understand that, like I said, is very important. And that's what we want to teach and instruct people on how to do.
So I joined one of your seminars, your webinars, because they're free, which is cool. So I was like, okay, hey, I'm gonna join this and see what it's like. And I'm like a very non-stock person guy, right? It's just kind of like, okay, it's all corrupted, And anyway, I was really surprised. Actually, I'll pull up right here. So we're looking at, say, for instance, silver, and so in your presentation you gave, like, I've always looked at these kinds of charts and my eyes start crossing over. It's like, okay, what's going on here? I mean, what's this? Obviously, the red line is down. That's a bad thing. The green line's good. It's like, okay, what are these bigger lines? What's happening here? So in your training, though, you broke down how to look at candles, how to look at the trends of candles, how to understand what these little lines do. So I felt like what it was is that you were just teaching, these are the fundamentals of how to understand what's happening in the stock market. And these aren't things that the financial advisors are teaching you. It's like, why would they teach you their tools? And the thing is, they're not even looking at this stuff. They're probably looking at a morning email they get, okay, hey, sell these stocks to your clients. Sell these investment vehicles. And so anyway, yeah, I mean, I felt like I learned more about stock market finance in that time than I have in almost the entire adult life for myself.
That's awesome. That's our goal, and I think one of the things that people walk away from these events is how simplistic it actually is. I mean, it is a really simple thing to do. It's just not easy because we get in the way of it, right? We get in our head, we get in our emotions as humans. We allow that to speak a lot louder than a chart. We may get really scared or get really excited because the stock moved up and hit targets. It's the very simplistic nature of reading a chart and just knowing what's going on is a huge step in actually taking control of your financial future for yourself.
And so obviously this is a quick thing, but this silver chart right here,
mm-hmm.
What are we seeing here? What's actually going on? How can I make sense of this? What does this tell you?
So this actually shows you the spot price of silver for the time frame that you're looking at. And if you come to our free event that we're hosting Thursday or Saturday, you'll get your choice of it. You can walk out knowing exactly what you're looking at on this chart. But essentially, this is what we call a transition in silver. And we're actually looking for some upside move here. And on that free event that we're hosting on the 27th, you can come in and we will walk through these charts and I'll show you where we're looking to get in, where we're looking to get out, what our targets are. This is one of the things I know you love gold and silver. We've had numerous conversations about that. I know you've got some in your safe, but the cool thing is when you have it in your brokerage account, you don't have to have the pullback and hold through from 120 back to 57. You don't have to hold that 50% retracement. You can actually get out at the highs, turn that into liquid cash immediately. And then when it drops back down into the $57, $60 area, that's where you know, hey, this is where I want to start accumulating even more, either adding it to what I have in my safe or put my funds in it so that I can make this 12% move that it's currently made from when we called it out at 60 for our members.
So you're not running like a investment company. You're not taking people's money and managing it for them for a fee. You're teaching, right? That's right. So if I came and I took a couple of your webinars, learned your stuff, I can just say, okay, thanks, buddy. See ya. I can go off and use that trade on my own, right?
Is it?
So it's not like you're wrapping people up and saying, okay, hey, now it's time to invest in this, and let's have everyone, kind of write a check. Here's $100,000, and you're gonna start making all this money by managing other people's money. You're teaching people to, well, you're in essence, you're teaching people how to fish, right?
100%. Yeah, we have a saying with me and my wife. We own this company together, so we have a saying: we don't ever want to hold someone hostage. And when you say, hey, give me 10,000, 100,000, 200,000, whatever the dollars is, 25 million in Leopold's case, give us this money for the next 3, 5, 10 years, it feels like you're stuck. But when we empower you with education, you can go out and do this for yourself. And so that's the route that we've taken. Anytime we can allocate power back to a person, that's what we want to do. And so that's why we focus on the educational portion of it.
Makes perfect sense. So, Mark, walk us through this upcoming event that you've got here. So it's August 27th or 29th, right? It's live. Yep. So tell us, what to expect. And I'll have all the links for this will be in the show description to access here and to reserve your seat. But walk us through this. Yeah.
So you get to choose your date. August 27th, which is Thursday at 4 p.m. or August 29th, which is a Saturday, that's 11 a.m. And if you click the reserve your seat button for me there, Seth, and you'll see it pop up, you get to choose your date. All you got to do is put your name, email, phone number in. You'll get some email reminders from us leading up into the event. And again, it's absolutely free and it's live. This is not pre-recorded. We will be there with you. I'll be teaching this both days. And typically we go for about 2 hours of actual education, and you will walk out knowing significantly more than when you started, right? You'll understand charts. You'll understand the candlesticks. You'll know what it means. You'll know your buy and sell points. We will walk you through all of it. And most importantly, Seth, we'll walk you through understanding your risk, the risk that you have in those trades. And on this one, we actually have some stuff that's at a pretty good buy point. And so I'm going to be sharing some of those ideas with the group absolutely free. Like, hey, here's some stocks that we're really watching. Here's the buy points. Like, you mentioned silver there. We actually started putting a buy point on silver around 60 as well. There's a few other ticker symbols that we're looking at buying and investing in. And we'll give you the actual blueprint that I'm looking at for those names when you join us live.
I see. Okay. It makes perfect sense. And I can speak from my own experience in attending it. It's kind of cool because you're constantly asking for feedback. There's a really active chat and you're saying, okay, hey, tell me what you think, what's this? You're taking questions. So the whole thing is very back and forth. And it's just free, right? So it's kind of a no brainer, at least to to give it a try and see what you can take away from it.
Yeah, if you're wanting to increase your financial knowledge at all, and you're like, where do I start? This is an amazing place. It's free to attend. The only cost is your time. And you walk out with a really good, solid foundation of understanding how to read these charts. It is back and forth. My wife calls me a Labrador. She's like, if you were a dog, you'd be a Labrador. I'm like, no, I wouldn't. I'd be a pit bull. She's like, you're a Labrador. I'm everybody's friend. I like to talk. I like to make friends. And so we'll talk in the chat and I'll be like, hey guys, where are you from? You guys understanding this? Are you following this? Do y'all have any questions so far? And then we'll spend probably 30, 40 minutes just in Q&A, Seth, because we truly want you to walk out with value of what you came for, which is understanding how you can avoid losing this much money like Leopold did in your own personal finance.
Well, it'd be great if you could make that money. Maybe if I
There you
made
go.
like $25 billion, I'd take you out to dinner, like a nice
Well,
steak dinner.
No, I hope it'd be like maybe a Ruth Chris or something.
I'll
Something,
buy you a steakhouse.
something nice like that. No, we have tons of people that walk out of these events and they start putting what they've learned into practice, right? So I'll give you the kinetic or the potential energy. It's your job to turn it kinetic, put it into practice. And we have tons of students who walk out and then in just a few months are making hundreds, thousands, tens of thousands of dollars. Not all of them do it. And I can't promise you'll be the one to do it.
Yeah.
But what I can say is that you won't even have a shot if you don't attend.
That's a good point, man. So I'll bring it up again. So the URL is MIA for Man in America, MIA-Neos, NEOS.com. And I'll make sure that link is in the show description as well. The event is August 27th and 29th. And if I'm correct, if you reserve your seat, yet you can't make the event, something pops up, you can still access the event afterwards, right? You obviously you can't ask questions, it's not live, but you can still access the information, right?
That's correct. So we actually will send out a replay of whichever day that you sign up for. We'll send out that replay so that you can go, we'll post it on a page. You can watch it as many times as you want to. And we have a ton of people who actually watch that over and over and over again. Because again, it is a lot of information that we put into a 2-hour training. And so you'll get to go watch that replay numerous times until I think Tuesday. We take it down on Tuesdays.
So, I mean, I'd even say, even if you're on the fence, maybe you think you probably can't attend it because you're busy or whatever, still sign up for it because you'll get access to that replay, which is, that's valuable, right? Obviously, if you can go in person or you can go live, that's great. So anyway, well, Mark, thank you for doing what you're doing. And thank you for giving us your time. I think that we could just keep going and going because I think we could just talk for hours and hours, which is why we always start recording late because we get lost in conversation. But anyway, it's I really appreciate you giving us your time, and it's always a joy talking to you.
Oh man, thank you so much. And like you said, there's so many rabbit holes you and I could go down, whether it's the spiritual rabbit hole, I love talking about the Lord or finance or business or homesteading. Like we can get into all of it if you want to. And in fact, my wife is at a RCC meeting. It kicks off today. So for homeschool, so she's there doing the classical conversation kickoff today with all the kids. So we could talk about all this kind of stuff just because that's how we want to live.
Yeah,
and that's what we want for everybody else. We want you to live with freedom. That's why we call it the Freedom Trading Summit. And you take control of your own finances so you can do what God's called you to.
Exactly. Just being sovereign in every way.
That's it.
So, all right. Well, Mark, it's great talking to you, man. Just a reminder, everyone, sign up. Even if you think you might not be able to get to it, still go on there, hop on there, click the green button, reserve your seat, just name, email, phone number. And Mark, thank you again, man. It's always a pleasure speaking to you.
Thanks, Seth.
Here's an uncomfortable question. Why should your messaging app need to know anything about you? Most of us have already accepted that technology companies collect enormous amounts of information, what we click, where we go, what we buy, and who we interact with. That information is valuable because your attention is valuable. Keat takes a radically different approach. So Keat is a free messaging, file sharing, and video calling app built peer-to-peer. So there's no centralized company database that's holding on to your conversations. There's no metadata tracking and no phone number or email are even required to use it. Your messages are end-to-end encrypted and move between the people in the conversation. Your private life shouldn't be another crop in somebody else's data farm. So to get this today, visit keat.io/maninamerica. That's Keat, which is KEET.io/man in America. So download it free, invite one person that you trust, and start a conversation that belongs to you, not some big data harvesting company.